Hi guys, Reynaldo here from Millennium Super Trade Education. Today's trading technique tip is to find objective target points with the use of Fibonacci levels. Alright, let's go through here and have a look at a currency pair, which is the Aussie dollar, and the time frame is a 4-hour chart. So if you notice about looking at the bars, there was a lot of momentum basically with the Aussie. And it's running out of steam. With the size of that bar, it reached to a point of a level of supply, and it created pretty much a range of supply between 2 points, 107.02, 107.53. Okay, let's scroll and came back. Have a new level demand, or a small level demand, 106.60. So between the highest two, pretty much a good demand level, 1, 2, 3, about close to 100 pips, 90 odd something pips to be exact. And it's currently rebounding. So from the level demand, rebounded, then out of nowhere, you see right here within that doji, part of the uncertainty, the highs are lower now compared to the previous highs, and it's sitting on a level of supply. Now the odds and probability of this dropping is more than likely, and if you can see through here on the next bar as well, sales push the price back down to the level of demand, but the high is now lower compared to all the previous highs. And if I put just a trend line right there, so it's descending within this level of supply overall between 106.60 and 107.53, but in a very smaller time frame. You can see here 107.02 was just mainly an equilibrium from the demand level and the supply level. So nevertheless, in terms of low risk high probability trading, we see this because such a big move to the upside, that the odds and probability that this will drop is more than likely to happen than continue to go further up. Because at one point in time, the market doesn't want to go in a straight line, it has to correct itself. So we use a tool called Fibonacci, invented by Leonardo Fibonacci of Pisa in the 1800s, and found that there is a golden ratio of the 0.6182, which appears everywhere around us, from trees, flowers, the universe, the ratio of our body from the head towards our feet and our arms. The golden ratio is the 0.6182. So since the majority of traders are trading based on thought as well anyway, if we're going to go through the inner core of things, there are just certain levels on where the market is going to go. So if you can see through here, when I drew the fib is from the last swing low to the last current high, that if it chooses to drop, then we can identify some target points that we can utilize. So there are numerous target points that we can use. One is 0.382, 105.83, 0.5, 105.329, 0.618, 104.823, and by theory that if it does break the 0.618, the odds and probability to head back to the 100% level is more than likely to happen, which is now 103.32. Alright, so we can identify three fully objective target points, meaning that if you can see this and you can see those values and I see those values, then it makes it subjective. Subjectivity is when you have different target points. When you have a different result, I have a different result. So we can see through here that these are the three major target points that we can use if we're now shorting the Aussie against the US dollar. Okay, let's go through and move on and see where it went. Boom. So with the odds and probability of this winning to the downside is more than likely, and then that's what it did. So everything all in one bar, and this one produced in 1, 2, 3, 4 bars. So the momentum of the sellers to push the price back down is just so massive that the odds and probability that you can go and break the 61.8 is more than likely. But in other words, in our target points, on the other hand, target 1 has been taken, target 2 is also been taken. All the one I need now is target 3 and also target 4. Okay, stabilize itself, trying to correct itself back to the 38.2 before continue back to the 50%, and there it goes. Target 3 has been taken. The last one is a free ride, and next candle target 4 has been taken and beyond. So this is our trading technique for the week, is finding target points objectively with the use of Fibonacci retracement. Alrighty guys, take care until next time. Happy trading, and we are having our next workshop in November. At the end of November is the art and science of technical analysis. Please go through our website at www.estetrader.com, and if you need any challenges with or if you're having challenges with your current trading, you need more consistency, perhaps more trading skills, or want to know more about better entries, better exits, please don't hesitate to email me or email us at contact@estetrader.com. contact@estetrader.com. Take care till next time. Have a good one.